Hey everyone, this is Kevin from MS Money Moves. Today we're going to be going over classical Elliott wave theory. This is Elliott wave's classic 5-wave impulse here, 1 through 5. We got 1, pull back 2, 3, extended, pull back 4, and up to 5. Now I'm just going to be doing a brief overview of Elliott wave theory and show you how I use it to project and forecast price models. So let's begin. So as you see, my first leg on 1 starts at the beginning of a new uptrend. It actually breaks out in this downward wedge right here on the Viking Therapeutics chart. So about 98 cents, it pulls up to $3.24. That's our leg 1, from lows to highs, leg 1. Now, leg 1 pulls back to leg 2. Leg 2 is known as our corrective wave. You may have heard the terms ABC correction. That is when a stock has gone through its first leg or its first set of subwaves, which in leg 1's case would be 1, 2, 3, 4, 5. And leg 1, as you see, pulls back to leg 2. And Elliott wave states that leg 1 will retrace approximately 0.5 to 0.618 retracement to the bottom of leg 2. And something really interesting there is it pulled back right into an earnings date. That was a huge catalyst for Viking. Leg 3 extends beyond 100% retracement. It actually tests 100% retracement in here and pulls back, and then tests it again, pulls back, and ultimately ends up breaking through and finishing its extension a little above 1.618 retracement. That's a good number to watch out for when looking at leg 3 extensions, is the 1.618. Also, another couple of numbers to keep in mind, leg 3 is known to retrace approximately 0.382. Now, again, with Viking's chart, it is almost right on the money. And again, we would have been buyers here, just like we were at leg 2. Buyers right after earnings catalyst, rode that uptrend. And on top of that, if you watch the EMA video, you'll see that the EMAs even crossed over at this time too. The 6-day crossed over the 13 period. So it's very interesting to see. And also up here, you would have seen it was in a corrective wave from leg 3 to leg 4 as the 6 period crossed below the 13 period, the opposite of what happened from leg 1 to 2. So if leg 3 to 4 retraces 0.382 and leg 1 to 2 retraces from 0.5 to 0.618, then we know we can pretty confidently say and project and forecast what leg 5 is going to approximately come out to. The beginning of leg 1 to the top of leg 1 is about $2.12. We'll call it $2.10 just for the sake of math. Leg 5 actually ends a little bit above that at $6.40, but you would have got almost maximum profits. We're talking 10, a few cent, 8-cent difference by putting a profit exit at $2.10 above where $4.20 was, since leg 1 and leg 5 are equal if leg 3 is extended, according to Elliott wave theory, that is. So this is a perfect example of Elliott wave, 0.618 retracement to leg 2. Leg 3 is extended above 1.618. Really nice setup. And then leg 3 to leg 4 retraces 0.382. That is very, very common after an extension to get 0.382 retracement. And leg 5, right on the money with leg 1. Anyways, this was just an overview of Elliott wave theory and classic 5-wave impulse and what happens throughout the impulses. If you guys have any questions, feel free to comment, like, subscribe. MS Money Moves. Let's get this bread.